Welcome to Nerdbull1669 Weekly Trading Option Tips for this week, 5th of January to 9th of January 2026. This week, market direction hinge on three catalysts, the macro data, liquidity conditions, and the technical inflection levels. I will walk through the base bullish and the bearish scenario and how I would actually position for each of them. So the market is currently in the consolidation phase. The primary theme for this week is actually digesting the gains. So traders will be watching to see if the indices can actually build a base for the next leg up, or if a deeper correction is needed to flush out the leverages. We will appreciate a like and share for this video if you find the video useful and helpful for you. Thank you for your support, and also look forward to your continuing support for our channel. Here is a macro snapshot for the risk appetite, interest rate direction, and volatility regime. So for the risk appetite, the current state is that the risk appetite is moderately constructive but selective rather than broad-based. So equity market, particularly the US stocks, especially the leadership from the AI and the tech sector, has seen strong inflows and performance, while risk assets like the crypto has struggled to regain momentum after the 2025 drawdowns. So gold and other heavens has also been beat, and then suggesting cyclical rebalancing rather than the outright bullishness. So investor positioning trends, so coming to that, investors are actually positioned for continual growth in the equity and with a cautious overlay. So there are selective rotation away from high beta risk into a more stable and governance oriented asset and yield elsewhere. So what is the outlook for this week? So I would expect cautious risk on behavior around the macro data releases, employment, inflation, and PMI, with limited convictions buys, especially if the data supports a smoother policy transition narrative, which we'll discuss later in the next slide. So for the interest rate direction, so coming to that, monetary policy expectation, the Fed has already eased the policy into late 2025, bringing rates down to a mid 3% range, approximately 3.5 to 3.75%. And markets currently price a pause early in 2026, with the potential for further cuts later in the year, depending on incoming macro data this week as well. So global policy divergence. So there is a disconnect basically across central banks. The US lean more dovish relative to some developed markets like Japan, where growth, inflation, and dynamics are weaker or more uncertain. So these contrasts could drive relative rate differentials and currency volatility. So for the near-term rates drivers for the week of January 5th to January 9, 2026. So US inflation prints, labor data and PMI would be the immediate focus point. So market are likely to interpret softer inflation as justifying the Fed's pause but ease bias, which should support risk assets and underpin the rate expectations. Okay, so coming to the volatility regime. So current volatility landscape. So macro uncertainty remains elevated. Inflation dynamics, monetary policy transition, and labor market signals, and geopolitical developments maintain a broader volatility risk premium across the markets. So equity and FX, right, actually implies volatilities reflects this uncertainty rather than compliancy. So coming to the asset class signals, so for the equity, right, volatility is basically subdued, but then it's actually fragile. So range trading is expected absent new catalyst. So for fixed income, rates volatility is supported by policy uncertainty and potential treasuries repricing. And for the FX, right, cross-asset volatility may spike if the data deviates from expectation, especially in the US versus the EM and then the DM central banks divergence. So near-term volatility outlook. So coming these 10 holidays, liquidity through the first week of January can amplify moves. So expect volatility to be reactive rather than directional. Volatility spikes on data surprises or policy commentary. So for this week, we are actually expecting this some of the key calendars drivers for coming today, 5th of January, 10 a.m. Eastern Time. The ISM Manufacturing Index. So this will basically tell us how the manufacturing is actually performing. So the next one will be coming tomorrow at 9:45 a.m. Eastern Time, the S&P Final US Services PMI. So this will give us a guideline of how the US services is performing. So on the 7th and on the 7th, there are pretty much some of the important economic releases like the ADP employment and then the ISM services index and job opening for November. So this will basically give us a direction of how the rate cut will be going and how many are we going to expect this coming year. So on the 8th of January, 8:30 a.m. Eastern Time, we have the initial jobless claim. So this will basically tell us, how the employment market is like for the US. So I personally think that a weak employment market would basically get the Fed to cut rates more. So on the 9th of January at 8:30 a.m. Eastern Time, we will have the US employment report, which further will tell us more about the US employment, how is it going to be like. And at 9:45 a.m. on the 9th of January, we have the University of the Michigan consumer sentiments. This will tell us how the consumer will be spending and how the economy basically is doing. So coming to the weekly outlook for the S&P 500, basically we are looking at a neutral consolidation. So the index is actually hovering just below the all-time highs, and then a breakout is actually required for a fresh volume, likely from the upcoming economic data this week. So I'm actually looking at a above 6,918 for a trend continuation, and the anything that is below the 6,800 will be a pullback risk. So the bull have to need a decisive daily close above the 6,918. If this level clears, right, the immediate target is the psychological 7,000 mark. So the pullback risk, which is basically indicating a bearish direction. So the critical risk level, right, is actually 6,800. The failure to hold this support opens the door, right, for a test of a 6,700 to 6,750 zone. So do note that as long as the price hold above the 6,008, right? So the trend is considered healthy consolidation. Anything that's below 6,800, a short-term momentum flip to the bearish is possible. So coming now to the weekly outlook for Nasdaq. So basically, the outlook, right, is actually bullish, but it's fragile. So tech is leading, but dominance, right, is narrowing to a specific hardware names. So for us to look at the strength above 23,900, so the index is actually bullish if it's actually while trading above the 3,100, and then the key breakout level to watch, right, which is the strength is 23,900. So reclaiming this level will signals a run, right, towards the 24,500 level. So what about the failure? Okay, so a failure below 23,100, which is a breakdown below 23,100, a key upward trend, right, would be a major technical warning. So the next support target below that, right, will be 22,300. So now coming to the stocks, where I'm looking at the Amazon AMZN. This is the weekly level. So Amazon is actually lacking slightly, pulling back to its 12 months moving average. It's currently in a prove it zone, but for the bulls. So for the bullish buyers, right, it must hold above the $221 level, and then the bulls also wanted to see a reclaim of the 221 the $231 to confirm a bounce is underway. So in terms of invalidation, so a daily close below $220 invalidates the bounce thesis and suggests a deeper drop towards $210. So coming to the next one will be Google Alphabet. So we can see relative a strong relative strength. So the Wall Street analysts, right, actually can reiterate strong buy ratings to start the year, critique the AI integration for Google Alphabet. So for the bullish buyers, right, it's bullish as long as the price can hold above 312. Immediate resistance, right, is at 321. So for us to look at the bullish buyers, right, a break above the $321, right, will target 330 plus and above. So for a invalidation level, we are looking at a close below the $307 to $312 support level, which would invalidate the immediate uptrend and then signal a short-term So coming to the next stock, which is Nvidia, NVDA. So this is the leader of the pack. So price action remain robust with a high buy side volume. So for the bullish buyers, right, we are looking at the stock that is aggressive bullish above the $183 level. So immediate target for the week, right, is actually a test, right, of $192 to $195. So for invalidation, right, we're looking at a break below the $181, which actually damaged the short-term chart and would likely trigger a few of lower gap towards the $170. So coming to the next one and the last one, which is a Palantir, PLTR. So this is high volatility, and then it's actually trading at a very rich valuation, 100 times sales, making it sensitive to interest rate sentiment. But momentum is currently upwards. So I think this is one of the stock that we should look out for this week, especially we are looking at how the interest rate will be moving. So bullish buyers. Bullish while holding the $155 to $160, which is a demand in the demand zone. So the upside breakout level is actually $170, targeting a $185. So invalidation, so a hard close below 150 is the line in the sand. So losing this level suggests that the momentum trade has broken. So we will risk a flush towards the $235. So a bit of the risk management framework. So these are the three things that we should always keep in mind. So trade levels are not the opinion, and we should define the invalidation before we entry, and then also reduce size during the consolidation. To practice discipline and patience with. So this video is actually for educational content only and it's not financial advice. So the disclaimer, so the analysis and the result, right, as you presented does not recommend or suggest any investings in the state stock. So this is purely for analysis purposes.